Bitcoin sounds super cool and mysterious, making many people curious about it. But what exactly is it? Can it really be considered money? Today, we're going to break it down from the basics, and by the end of this, you'll have a clear understanding of Bitcoin. First of all, Bitcoin is a type of digital currency. Unlike physical money like paper bills and coins that you can touch, Bitcoin has no physical form. It exists entirely on the internet. You can't see it or hold it, and it's only used for online transactions and payments. All Bitcoin transactions are recorded and maintained by computers across a global network. This process is called blockchain. We'll dive deeper into what blockchain is and how it works in a bit. Bitcoin is different from traditional currencies. It has no banks or institutions managing it. If you want to make a Bitcoin transaction, you don't need a bank or a payment company as a middleman. Simply put, Bitcoin operates on its own. When you transfer money through a bank, especially for international transactions, you usually have to pay high fees. But with Bitcoin, transactions can be completed almost instantly, and the fees are nearly zero. Yes, zero. So here comes the question. If there's no bank or institution backing it, is Bitcoin safe? Don't worry. Bitcoin transactions are protected by incredibly strong encryption technology, making them extremely difficult to alter. All transaction data is encrypted and publicly transparent, and this system is called blockchain. Every transaction is recorded in a block and linked to the previous ones. Think of it like keeping a receipt for every purchase you make, sticking them in a public ledger where each receipt has a unique serial number. And the best part, this ledger is accessible to everyone worldwide. Bitcoin transactions don't require banks, and they are anonymous, meaning your personal identity isn't directly exposed to others. Now that we understand what Bitcoin is, let's talk about how it was created and the story behind it. In 2008, an anonymous individual named Satoshi Nakamoto published a white paper titled Bitcoin, a peer-to-peer electronic cash system. This paper outlined a way to create a trustless electronic payment system using a peer-to-peer network. Nakamoto introduced the idea of using blockchain technology to enable decentralized transactions without relying on banks or financial institutions. This white paper laid the foundation for Bitcoin's creation, and from that moment on, Bitcoin became one of the most valuable assets in the world, revolutionizing the global financial landscape. On January 3, 2009, Satoshi Nakamoto successfully mined the first batch of Bitcoin, marking the beginning of the true digital gold rush. But guess what? The first ever Bitcoin transaction wasn't used to buy a luxury mansion or invest in stocks. Instead, 10,000 Bitcoins were exchanged for 2 pizzas. That's right, on May 22, 2010, a programmer named Laszlo Hanyecz bought 2 pizzas for 10,000 BTC, a day now celebrated as Bitcoin Pizza Day. Back then, it probably felt like a fair deal. But if you look at today's Bitcoin prices, 10,000 BTC could be worth hundreds of millions of dollars. This transaction became one of the most legendary moments in Bitcoin history. As time passed, more and more people started paying attention to Bitcoin, turning it into a rapidly growing industry. From 2009 to 2012, Bitcoin's price surged significantly. However, many still remain skeptical, dismissing it as just a temporary bubble. Despite its slow and uncertain start, Bitcoin quietly gained traction in the cryptocurrency world, proving that it was more than just a passing trend. In 2013, Bitcoin experienced its first major boom. This was the year when Bitcoin started attracting investors, media attention, and mainstream institutions. For the first time, its price skyrocketed from just a few dozen dollars to over $1,000. With the media hype and investor frenzy, Bitcoin transformed from an obscure digital currency into a global sensation. However, this also made its future even more unpredictable. Looking back at Bitcoin's history, its rise has been nothing short of a dark horse in the tech world. We've talked about Bitcoin's history, but you might still be wondering, how does Bitcoin actually work? So, what is blockchain? In the traditional banking system, all transactions are recorded by the bank. For example, if you transfer $100, the bank keeps track of it and approves the transaction. But here's the problem. The bank acts as the middleman, having full control over the transaction. Blockchain is different. It's a decentralized ledger. The transaction records aren't controlled by a single bank. Instead, they're maintained by thousands of computers worldwide. This means no one can modify the ledger alone. This is what makes blockchain so powerful. It doesn't rely on any single institution. Instead, it allows computers around the world to work together to maintain the ledger, ensuring it's transparent, secure, and trustworthy. In traditional financial systems, hackers only need to break into a bank's database to alter transaction records or even steal funds. But on the blockchain, to modify a transaction, you need to change the records on millions of computers worldwide simultaneously, and do it in a very short amount of time. This is almost impossible. This is why, from its creation until now, Bitcoin has never been hacked. It's like an unbreakable vault, with all transactions permanently recorded and unchangeable. So, blockchain makes Bitcoin the safest. A lot of people think Bitcoin is like virtual currency, just like game coins that can be generated for free, right? But in reality, Bitcoin is not free coins. It's created through a process called mining. And no, you're not using a shovel to dig the mountains. Bitcoin mining is actually a super intense mathematical competition. It's not about physical strength, but computational power. You need to use a computer to solve an incredibly complex math problem, and the first person to solve it gets a new Bitcoin as a reward. So Bitcoin is not just handed out. It takes huge computational resources, electricity, and time to mine it. In the early days, you could easily mine hundreds or even thousands of Bitcoins with just a regular computer. But now the difficulty of mining has increased drastically, and ordinary computers simply can't cut it anymore. Bitcoin mining is like an increasingly difficult game. The further you go, the tougher the competition gets, and the rewards get smaller. A Bitcoin supply is limited, just like gold. The creator of Bitcoin set a cap, and there will only ever be 21 million Bitcoins. You heard that right, 21 million. When Satoshi Nakamoto designed Bitcoin, he set it up so that a new block is mined every 10 minutes, with an initial reward of 50 Bitcoins per block. This reward halves approximately every 4 years, until the total supply reaches around 21 million. Once that limit is hit, no more new Bitcoins will be created. So over time, Bitcoin could become more and more valuable, just like gold, as it gets harder to obtain. Its value will likely grow with increasing demand, and investing in Bitcoin is like buying the gold of the future. By 2140, the last Bitcoin will be mined, and after that, miners will no longer receive new Bitcoin rewards. Is Bitcoin the angel of the financial revolution or the devil of speculative bubbles? Some people have gotten rich off of it overnight, while others have lost everything. What are the benefits of Bitcoin? What are the risks? Let's take a look. Decentralized. Bitcoin is decentralized, which means no government, bank, or company can control it. Unlike traditional banks, where your account might be frozen or transactions could be censored, with Bitcoin, as long as there's a network, you can transfer it anytime and anywhere. Low cost, fast transactions. Bitcoin allows for low cost and fast transactions, even for cross-border transfers, without any restrictions. Traditional currencies can be printed endlessly, leading to inflation. Bitcoin has a fixed supply of 21 million coins, making it like digital gold that won't be diluted. But Bitcoin's price is extremely volatile. You might earn $10,000 today and lose $20,000 tomorrow. It's not for the faint of heart. Also, Bitcoin transactions are irreversible. Once you send it to the wrong address, it's almost impossible to recover, so always double-check before making a transfer. If your Bitcoin is stolen or lost, you're truly out of luck. If you forget your private key, you'll never be able to recover your Bitcoin. If you're considering investing in Bitcoin, you must first ask yourself, can you really handle the shocks caused by its massive price fluctuations? No one can predict Bitcoin's future direction with 100% accuracy, just like we can't predict tomorrow's weather with certainty. However, one thing is for sure, Bitcoin's story is far from over. What do you think about Bitcoin's future? Feel free to share your thoughts in the comments section, and let's have an exciting discussion together.